So let's talk about why your payments on your mortgage just went up. Watch this to the end because I got a gem I'm dropping all the way at the end that is something that really nobody ever talks to you about. So I was over on TikTok and somebody had this viral post where they said that they couldn't believe that the insurance and the property taxes went up and nobody told her, and this actually went viral. It was on multiple sites. It was on the Shade Room, the Neighborhood Talk, and several other blog sites on Instagram. And I had already responded to it because she kind of blamed the situation on loan officer and the realtor for not telling her. So I think this is a great opportunity to talk to you all about exactly why your payment either has already increased or is going to increase in the future. First things first, I want y'all to tell me in the comments if you have a mortgage, did your payment increase this year? Just give me a yes or a no. I'm just curious to see how many people have already seen these changes already in place. Whenever you get a mortgage, you have 5 or 6 parts to your mortgage payment. You have the principal, interest, taxes, insurance, mortgage insurance, and potentially HOA dues. Of all of these 6 different variables, the only thing that is guaranteed not to change is the principal and interest payment. That is the part that the lender is in charge of. Your property taxes and your homeowner's insurance are 2 things that are absolutely subject to change because of whatever the value of your property is. Now, in the last 3 years, we have had exponential growth in the housing market. If you owned a home in 2019, your value is probably double what it was now versus when you bought it. And so subsequently, your county or city taxes had to go up as well. That is a huge factor in why your payment may have changed or may end up changing in the future, because we are still having increases in property values that are still above average. I believe in 2023, the market is up about 8 to 10% from what it was last year. The normal market prior to COVID was about 3% year over year in changes. So you didn't see anything that was doubling your tax bill like you are right now. Now, let's tackle this insurance. Y'all, these wild weather patterns have done some changes to the way that these insurance companies are insuring homes. As a matter of fact, we've had some major insurance companies completely pull out of states. For example, in California and in northern Arizona, State Farm packed their bags. They said, look, you ain't got to worry about us. You ain't got to worry about us. Don't worry, we ain't coming back. You need to find somewhere else to go. Find somebody else to insure you because it ain't going to be us no more. And it's because of wildfires that have happened in the area, and of course, earthquakes. And I'm 40, okay? So when I was in elementary school, I vividly remember them telling us that California was going to fall off into the ocean. So we still standing by waiting for that to happen. So weather patterns now include hurricanes in the Northeast. Like, what you mean in Connecticut and in New Jersey y'all getting hurricanes? Like, how is that even possible? In North Carolina, I live in Charlotte, we've managed to get snow almost every single year in some capacity since I was born. Last year was the first year we hadn't had snow in I don't know how many years. And they're forecasting that in Charlotte we may never see snow again. In Florida and in Louisiana, hurricanes are more prevalent now than ever before. They're stronger and they're coming more often. This is having an impact on the insurance. So as I said earlier, I was on TikTok and I was talking about it. And my God, y'all, people were telling me, and I mean not just telling me, they sent me screenshots where they were saying that insurance went from $2,500 to $10,000 in 1 year. Where they do that at? One thing that nobody will ever talk to you about, for whatever reason, and I don't know why, is the ugly secret of the escrow shortage. Your escrow account holds 2 important things: your property taxes and your homeowner's insurance. Every month when you make a mortgage payment, they take 1/12 of that payment for your taxes and 1/12 of that payment for your insurance. And at the end of the year, the lender or the loan servicer will pay out your property tax bill in full as well as your homeowner's insurance in full. So whenever you first set up your escrow account when you purchased your home, you had to deposit an extra 2 months of property taxes and homeowner's insurance in that account for what was called the cushion. A lender is not allowed to keep any more than 2 months of property taxes and 2 months of homeowner's insurance in your escrow account. And every single year, they do what's called an escrow analysis. That escrow analysis is there to make sure that they are not keeping too much money of yours that they're not allowed to have. So anything over what's legally allowed has to be returned to you. So with that said, let's pretend that you set up your escrow 5 years ago, okay? And your property taxes and homeowners insurance increased by $1,500 from last year to this year, okay? Now, let's pretend your new property taxes and homeowners insurance is now $3,000 because it went up $1,500. So let's say it was $1,500 last year and $3,000 this year. Well, what happens if you only have $1,500 in your escrow account? The lender or the loan servicer will pay it for you on your behalf in full. But now you have a negative number. You have a negative $1,500 in your escrow account. What will inevitably happen is they will roll that into your monthly payment. So now you have a now you have a mortgage payment that is not only increased because of taxes, increased because of insurance, but is increasing even more because you had an escrow shortage. So that's just something that a lot of times we don't tend to mention to you that I thought would be super, super important to mention to you now. So yes, if you get a mortgage, it does do some positive things. It does provide you an opportunity to have a fixed cost as far as your housing, which is the biggest debt that you have. But the only part of that housing payment that will not rise year over year if you have a fixed rate is the principal and interest component of it. Unfortunately, these other external forces regarding like your insurance, I can't speak to that. But one thing that I do know that I knew several years ago was that it is not going to stop anytime soon. The weather patterns are becoming stronger and they are costing these insurance companies millions and millions and millions of dollars. So as you get pre-approved and you go down this pathway to home ownership, please know that your payment can change and it will change, but not because your principal and interest change. It will change because of your third-party costs, such as your property taxes increasing because the value has increased and the insurance increasing just because of external forces that nobody can control. So I hope this helped. Y'all have a great day.